Let's just start with perhaps the number one thing that comes to investors' minds when you think about the Italian public finances situation. That is their debt to GDP level, currently sitting at around 150%, the second highest in the Eurozone, behind Greece. And of course, it did jump quite a lot during the pandemic, as it did for all countries in the Eurozone. But it does raise a lot of questions about Italy's ability to continue servicing the debt that it sits on, especially now that its primary surplus is no longer existent and interest rates are on the rise. So perhaps the way to deal with that is by growing. So let's just take a look at Italy's growth picture. And you can see that for the most part over the last 20 years, trend growth has sort of averaged around 0.5 percentage points, quite low. There has been volatility around the pandemic. In the last couple of years, we have seen a lot of built-up demand come back. But going forwards, there are quite a few headwinds that are facing the Italian economy, namely the energy crisis. Now, Italy is a very gas-dependent economy. About 40% of its gas supplies did come from Russia historically. They've obviously been looking to diversify away from that. That is one major headwind. In addition to that, political uncertainty. We know that elections are coming up in a week's time, but on average, Italian governments tend to change every 13 months or so, which hampers their ability to introduce structural reforms. And then finally, perhaps more pressing, we talk about higher interest rates. So let's just move on and take a look at what investors tend to look at when they think about pressure on the Italian economy, and that is the spread between the Italian 10-year yield and the German 10-year yield, currently sitting at around 225 basis points. Now, it is worth noting that the ECB own about 25% of all BTPs outstanding. They've also introduced several anti-fragmentation tools. They reinvest the bonds that they've originally purchased via some of their PEP program and APP programs. So that has been supportive to this spread. So overall, we haven't quite got back to levels that we've seen, say, back in 2018 when the spread got to 300, or at the peak of the 2012 crisis when it got to 500. But I guess the more immediate concerns for investors is what is going to happen to those European recovery funds. Those are so important for Italy's growth prospects going forwards. You can see from this table over here, they're set to receive about 20 billion euros every 6 months. So every half year, they're entitled to these funds so long as the Italian government sticks to their side of the equation in terms of introducing criminal justice reform, tax reform, etc. So one of the concerns is that if a new Italian government comes in, they may not stick to their side of the equation, in which case these funds distributions would be at risk. And of course, that means the Italian economy is at risk. The Italian Government Statistics Office estimates that all of these funds in total, almost as much as 200 billion over the course of the next 5 years or so, could add up to 3.5 percentage points to Italian GDP. So without them, there is actually concern that the Italian economy may not grow as high as expectations.